There may be more inventory hitting the market, there may be less competition to buy a home, but that competition is definitely not gone and likely not going away anytime soon. Multiple offers on properties are here to stay, and I'm here to help you win in an ongoing seller's market. Hey everybody, I'm Ryan Haarer, your Denver realtor, helping you understand the ups and downs of this real estate market, and here today to help you win in really competitive situations. In this video, we are going to talk about how your offer can rise to the top of a pile, from the big picture ideas like price alone, how much should you offer, when is it too much, to the little items. I shouldn't even call them little because they're really important details in this market. We're talking about phrases you've probably heard, appraisal gap coverage, all the way to should you waive an inspection in this market, and make sure you stay to my number 5 tip, which just helped me get a buyer under contract. It comes with a little bit of risk, but we're here to manage it. Before we jump into these tips, please, if you get anything from this video, please like and subscribe to the channel, and more importantly, drop a comment below so I can better understand how I can help you understand this market. All right, let's get into it. So number 1 tip is preparation. This is not just some throwaway tip. In fact, this may be the most important thing you do to enter the market as a buyer. Preparation will help you focus in on homes that actually fit your needs and your budget, so you can actually make strong, competitive offers and spend way less time out in the market. We don't want you out there for months and months and months at a time, eating up your weekends looking at houses that you can't actually make offers and win on. So this preparation is going to be key. It's imperative that you have a strong team around you that can help you through this process. I'm talking about a knowledgeable realtor and lender to make sure you're ready to enter the market. These two people are hopefully going to, and I highly recommend that you interview them. Make sure they're the right fit for you and that they have the knowledge necessary to tackle the market with you. But what they're going to do is prepare you in terms of what kind of homes you want to see, and more importantly, what price point you're going to be in. You need to get a loan pre-approval, and that's why you need to work with a strong lender who can do their due diligence. You send them all the documentation, they do their credit checks, and come up with a pre-approval number, a top number that you can go up to in terms of a mortgage, so that you know what homes to look at. A pre-approval is deemed so crucial in real estate that sellers require typically that you send a pre-approval letter from your lender so they know you're legit when they accept your offer. It is extremely important that you work on this about 2 weeks before you go and look at houses, so that the lender and their team can do their work, get all of your documents and your credit checks done, and get you that pre-approval number, so that when you want to write an offer, maybe it's that first weekend, boom, you're ready to go. You have your pre-approval. The seller won't think twice about your ability to get through the loan process. Awesome insider tip here. When you are looking for lenders, there are several factors that you should look for, but one you should talk to them about is how fast they can get a loan closed. For example, many of the lenders I'm working with right now are doing so much of the underwriting process up front, that documentation, those credit checks, all of the work they need to do to make sure that you are a viable buyer, borrower in their situation, that they can get you closed in about 2 weeks. The lenders I'm working with are getting buyers closed in 2 weeks' time, as opposed to the typical, you've heard of, a 30-day close. This market's moving way too fast. There are a lot of people with cash out there who are putting in cash offers and closing in 10 days, and so you cannot be far behind that. Find a lender who can close quickly. There are plenty of other factors that you should consider, but that is certainly one of them. One kind of final point on this preparation piece is, when it comes to finding the right realtor for you, make sure that this is a person who understands the market intimately, knows the zip code that you're trying to find a home in, has lots of connections, maybe with the real estate agent who's going to be on the other side of a transaction. That can certainly be helpful. All of these little things are going to help you get an offer accepted faster. People who are working regularly in this market and doing it at a high level know the nuances that need to be in every single contract to get your offer to rise to the top. So I know that it's relatively easy to get your real estate license, but this is not the type of market to rely on the friend or the family member who does 1 or 2 deals a year. This is a time to find a seasoned professional to really help you through the process. Let's get straight to the second point, which is price and time. Two big ones when it comes to writing an offer and really any market. Of course, sellers want to make as much money as possible, and generally speaking, they want to close as fast as possible. Let's start with time. I hit on it a little bit before, so I won't spend too much time here, but make sure you're working with a lender who can get you closed, your loan closed as fast as possible. Somewhere in the 2-week range is ideal in this market. It's not always necessary in every transaction. Some sellers aren't really looking for that 2-week close. Maybe they need a little bit of extra time to get out of the house, whatever it may be, but make sure you know what the answer is in terms of how fast the seller wants to close, because in a seller's market, it's up to them, and make sure that your lender can actually do that 2-week close. The second piece of timing is a post-closing occupancy agreement. This is coming up a lot in this market right now. This is basically a rent back. So you close on the property as a buyer and then allow the seller to stay in the home for up to an additional 60 days in Colorado. And in a lot of cases here in the Denver area, buyers are allowing sellers to stay in that home rent-free for $0 up to 60 days. It is a common occurrence here, and you actually have to be prepared to offer that up. So keep that in mind. Now to the big one, which is price. In just a little bit, we're going to talk about a few tips that will help you win, even if you aren't the highest offer on the house. But if you can be the highest offer, that certainly helps. Sellers want to make as much money as possible when they sell their home or investment property. The question for you becomes, how much should I offer and how much is too much? For starters, let me just say, quick caveat here, everyone feels like they're overpaying in a market like the Denver metro areas. Everybody feels like they're paying over market value because generally speaking, they have been. The market is appreciating so fast though that within a matter of months of overpaying, you've caught up to market value. And yes, as we're sitting here halfway through 2022 and I'm recording this, things are starting to slow down and the market is shifting. We may have to re-record this video at the end of the year given what's happening, but keep in mind that everyone feels like they're overpaying. We just don't want you to way overpay and make a mistake. Okay, so how far over list price should you offer? Well, if the home you like is listed at fair market value, and your realtor should be able to determine that by looking at some comparables in the neighborhood, then you want to try to figure out how far over list price homes are selling for in that zip code. And you can do that here. You can see this is up in the Highlands, Sloan's Lake area, and you can see over the last year, homes are now selling at about 4% over list price. And so that gives you a general idea. You can do that calculation pretty simply and figure you're going to be in that range, possibly a little bit higher. It's not a standard. I'm not saying that's exactly where the home is going to end up, but it gives you a ballpark. For example, if a home is listed at $650,000 and the zip code is closing at roughly 3% over list price for this type of home, you're probably going to be paying about $20,000 more, $670,000 roughly. So that's your first clue as to how much you should offer on this home that you like. The other way is to ask the listing agent, ask the seller and their agent how much the other offers are for. Now, generally speaking, you won't get a straight answer to this question, but a savvy real estate agent might have a connection with the listing agent or might be able to ask certain questions that get a better idea of where they're landing. If you get no information at all from a selling agent, we sometimes suggest that our buyers write escalation clauses. And what this means is, let's take that $650,000 home we were just talking about, and you're willing to go all the way up to $680,000. You can tell the seller will pay $650,000 and beat any other offer that comes in by $5,000 up to $680K. That way, you know you hit your top number, you're willing to go that far, and anything else that comes in, you'll have beat it at least in terms of your top number. Having said that, the top price is not always the best offer. If you are a home buyer, recently purchased a home, and you know that you beat another offer that was higher than yours, tell us how in the comments below. I want to hear your stories about how you've been buying homes and winning in markets like this one. Having said that, let's move on to our next tip appraisal gap coverage. So you've probably heard of the term appraisal gap coverage over the last couple of years as competition for homes has skyrocketed. It's one way that you can actually beat out other offers that may be higher than yours. All right, so here's how it works. So you get an offer accepted on the home. You're trying to get a mortgage for that property so you can pay for it over 15 to 30 years. The bank's gonna wanna make sure that they're not lending you more money than the home is actually worth. They want to make sure that if you, for whatever reason, can't make your payments, that they can take ownership of that property and make their money back. So a licensed appraiser comes in and does a thorough evaluation of the home, compares it to other recently sold homes in the area, comes up with the market value of the home. So let's say a home is listed at $650,000, and in order to win, you've offered $680,000, but the appraiser comes back and says to the bank and to you, the buyer, this home's actually only worth $665,000. That $15,000 difference is not something that the bank is willing to make up. So the deal could fall apart. To prevent the appraisal gap, that $15,000 gap, from ruining the deal, sellers right now in this market are wanting to see appraisal gap coverage in the contract before they sign it. That means you as the buyer are agreeing to the seller that you will make up the difference between what the home was listed for and what you've offered on it. So they know that you're going to make up that $15,000 in appraisal gap coverage should the time come. That money, for the record, is cash at closing. So you're bringing an additional $15,000 to your down payment, your closing costs, etc. If you don't have $15,000, maybe offer $5,000, $10,000 of appraisal gap coverage. There are a lot of different ways to write it up, but as much as you can offer, the better. For the record, we have definitely seen sellers take offers with more appraisal gap coverage, taking that offer for $680,000 instead of the one for $700,000 because the buyer who is offering $700,000 didn't have appraisal gap coverage. It's a way to ensure a smooth transaction and that the seller makes as much money as you say they're going to offer them. I know this can be a confusing topic. If you have questions about it, please drop a comment below or reach out to me directly. My information is in the description. Let's get on to the next big one that gets talked about all the time: inspection. All right, let's get this out of the way. I do not recommend waiving an inspection when you purchase a home. You should absolutely hire a professional inspector to do a general inspection of your home, to scope your sewer line for single-family homes, and to do a radon test if you feel it's necessary. These things are very important to making you feel comfortable with your purchase. But if the deal is competitive, you should tell the seller in your offer that you're still going to do an inspection, but you won't ask them to make any repairs. Essentially, you're saying, we're going to buy the home as is, and if there are any major issues, we have the ability to walk away from the deal unless the seller really wants to come back and make it work, but the seller is certainly not obligated to even look at your objection to the inspection. Having said that, even in a market where sellers are kings and queens and get whatever they want, major issues that pop up can sometimes be resolved. Sewer lines are a common one. If it is really bad and that sewer line is in complete disrepair and it needs immediate attention, it's possible that that seller will say, well, I know I have to disclose it to the next buyer if there is one, so we'll work with you to repair it. They may not come up with the full costs of a sewer line repair or whatever, foundation repair, whatever it may be, but they may throw a few $1,000s your way to help remediate the issue. Now again, every single deal is different, but we have had some success getting sellers to provide some repairs or credits over the last year or two. It really does depend on the deal. Also, another thing that I do as a realtor, and hopefully your realtor will do as well, is when walking through the property, paying close attention to the major systems of the home, the HVAC, furnace, the hot water heater, the electrical systems, the foundation, the roof. And while we're not professional inspectors, it may be something that we can point out to the inspectors to double check when the time comes. So it's something you definitely want to pay attention to. Now to tip number 5, the one that comes with a little risk, but the one that has worked for us recently: non-refundable earnest money. It's probably the highest risk tip that I've given today, but one that certainly works and it has risk that can be managed. So what is earnest money? If you're not familiar, it is the deposit you put down into an escrow account once you go under contract. In Colorado, it's typically 1 to 2% of the purchase price. So let's say in this case, it's $15,000. If you back out of the deal for legitimate reasons that are outlined in the Colorado contract to buy and sell real estate, you get that $15,000 back. But if you tell the seller up front in that contract that you want that $15,000 to be non-refundable, then that seller gets to keep it no matter what happens in the deal. You back out, that money stays in. Now, it is a huge boost to your offer getting to the top of that stack, because when the seller sees non-refundable earnest money, they know you are very serious about making this deal happen. There is very little that you as a buyer will let stand in the way of you closing on this home. Of course, it's a risk because if something big pops up, let's say you have a problem in inspection that can't be overcome and the seller's refusing to work with you to fix it, you may have to back out of that deal if it's a really major thing. And guess what? That $15,000 is no longer yours. Okay, you're probably saying this guy is crazy telling me to make my earnest money, the money that will eventually go to my down payment, non-refundable. Well, there is a way to manage this risk. And what some of our buyers have chosen to do is make that earnest money non-refundable after the inspection period. So say you go under contract on a Sunday and your inspection period is Friday. Well, you want to wait until after Friday to make that earnest money non-refundable, and you can write that into the contract. Another way to do it is to just make a portion of the money, earnest money, non-refundable. Maybe you're willing to give up $1,000, $2,000, $3,000. Maybe you're willing to make about $2,000 non-refundable immediately and an additional $10,000 after the inspection period. There are different ways to play it. Talk with your realtor about what makes the most sense for you and the risk you're willing to take on. Final caveat to all of that is, just final thought to all of that is, there is risk associated with that. So please make sure it's something you're comfortable with. Talk to your lender, talk to your spouse if you're buying a home together, talk to your realtor about whether or not it's even worth it. It might not be needed in some deals, especially as things start to change in this market, but it is another tool that you can use to get your offer to rise to the top. Definitely not recommended for especially first-time home buyers who are extremely limited on the amount of cash that they have to get the deal closed. So that's it. 5 ways we are getting offers to rise to the top in this seller's market, a seller's market that is here to stay. If you got anything out of this video or you want more tips, please reach out to me with any of your questions and like, subscribe, and comment below. The comment is the most important part. Tell us what you want to see a video on next. We'll see you next time.